stocks today. A move so strong, in fact, for the last couple of days, if you could call it that, to the extent that it has overtaken Nifty Auto on a year-to-date basis now. Mayuresh, your view on metal and how sustainable this rally is that we're seeing?
Very good afternoon. No, I think the entire onus probably still is in terms of how China probably comes back very, very strongly because they are one of the largest producers as well as consumers of not just ferrous, which is steel, but also the non-ferrous metals as well. Obviously, the expectations in terms of global demand slowly and steadily coming back is something to be checked and seen over the next few quarters. But with Trump tariffs kicking in, the entire expectation in terms of how this will play out is something that needs to be monitored as well. In the Indian context, the demand probably remains strong. Government CAPEX expected to continue at a good pace. Private CAPEX seeing signs of coming back. You've already seen signs of backward integration happening for most steel companies. And as they ramp up these operations on the backward integrated part, there will be more cost efficiencies that will start kicking in. So the large part of expectations is global demand slowly and steadily coming back, domestic demand remaining strong, and therefore with inventory levels remaining at absolutely abysmal levels across the globe. As restocking starts taking place slowly and steadily, LME prices should also start reflecting better traction going forward, which will then create operating leverage on the balance sheets. So again, I think JSW Steel, where the EBITDA per ton might actually improve in a calibrated way and reasonably strong. Steel Authority of India, which has a large presence specifically for the domestic sector within the ferrous names, look strong. The rating and rankings suggest that if earnings probably persist, there can be further momentum that can probably come through these stocks as far as the ferrous pack is concerned. Within the non-ferrous plays, in Nalco, and obviously the recovery in terms of Novelis as well as the core operations with expectations of aluminium recovery is something to be monitored as well. Outside the core metals, I think Neyveli lignite, NLC India is something that we continue liking. The rating, ranking, institution holding, all the parameters that we see in CANSLIP probably get fulfilled. And the targets that they probably set, both in terms of their mining operations as far as lignite is concerned, expectations of renewable as well as thermal exponentially increasing, and margins actually expanding multifold over the next 3 to 4 years makes it a good case outside the core names. So selective, but I think there can be reasonable amount of recovery as far as the domestic names are concerned.
Okay. Some big movers in trade, and before we go to that, Reliance Consumer today relaunched the iconic personal care brand Velvet. Jude caught up with the director T. Krishna Kumar to discuss the revival of legendary vintage brands and their future growth roadmap.
Actually, we are taking a bit of a shot which is not very normal in the consumer space. We are going for most of our products to be relevant to every Indian. We target, because of our pricing with the people, the bottom 80 crore Indians, but we believe our products are good enough for every Indian. Okay. So that is going to be our target. We will enter into every category in consumer space. Like we have launched this for women, you can expect something for men. You can expect something for babies. So we will straddle the entire personal care business. From babies to men and women. Right. So I think that's the thought process in every category. We get into a category, then we expand to fill the category. Like we got into beverages, everybody kept on talking about only carbonated soft drinks, but now we have water, we have a sports drink, we have energy, we're going to soon put vitamin drinks. So we will, our idea is to proliferate, because we come from the background of retail. Right. So we don't like doing only one product.
Absolutely. One last question before I let you go. RCPL has been on a bit of a drive so far. Brands like Sil, Camper Cola, Velvet, of course. Vintage brands, legacy brands making a comeback thanks to, investments by the company itself. But you said something very interesting a little while ago, that older brands, legacy brands need to stay relevant today, and that will be the key determinant of how well they do in the market as it finds itself in today. How do you feel that you can bring the key differentiator towards making this relevance happen?
See, first and foremost, I think all the drive, everything is really the vision of my chairman. I mean, he keeps himself relevant every day. I mean, he knows the latest development in artificial intelligence to what the consumer wants. See, I feel the biggest strength that we have built for us, before we launched RCPL as a company, we built our own R&D facility. Right. Very few companies do that. companies get in, and then once they get to 5-6 years, then they build an R&D facility. Because my chairman's vision is always to be on top of technology, on top of ingredients before you do anything. Right. Because that's when you can really be able to do the right thing in the marketplace. So our R&D is one of the state-of-the-art R&Ds. I would claim it is one of the best in the country. Mm-hmm. And they are capable of keeping on tap with all the developments in the world. See, relevance is keeping tab of the trends and ensuring that you keep intervening and making the trends happen. So we are well positioned in terms of back-end R&D. And, you know, Reliance is a deep tech company. On the other side, we get technology which our chairman concentrates on. And these are two important ingredients of being relevant.
Okay, that's the word coming in from the management of Reliance Consumer, revival of a heritage Tamil Nadu brand, Velvet, but that has been the pattern in which Reliance Consumer operates, and they are focusing on revival of old brands, bringing back nostalgia, and that is the kind of user segment that they're targeting. But let's welcome on board Mr. Dharmesh Shah, Head of Technical at ICICI Direct. And Dharmesh, hi, good afternoon. Thanks for your time today. Let's talk about two of these stocks that have been buzzing and have been making the news for quite some time now, and that's Eternal and Swiggy. And the reason I ask you about both of these stocks is that today we have a city note coming in on both of these stocks. First for Zomato, they've maintained their buy rating, but there's been a sharp target price to 395 from 320 earlier. Similarly, for Swiggy, Dharmesh, they have hiked their target price to 495 from 465 earlier. What targets are you penciling in for both of them, and which one do you think would outperform in the near term?
Thank you and for inviting me on your show. And definitely, I think so. The way that things are panning out for most of these new age companies, I think so. They seems to be really outperforming even in this current corrective phase. Even if you look, I think so, for like PTMs or Zomato or Swiggy, I think so. Most of the stocks have been outperforming in terms of performance. Yes, definitely. We believe, I think, so the way the setup seems to be forming on higher top, higher, I think so.
Dharmesh, apologies for interjecting, but we have you on a very patchy line. So let's quickly fix that. Mayuresh, would you have a view with regard to some of these new age tech platform companies? Do you like any of them, and especially with regard to an Eternal? Firstly, hi, it's been a while since we spoke, but give us your sense.
Hi, Harsh. I think pleasure to see you here at ET now. So two things. One, I think in terms of the food delivery platforms, whether it's Eternal or Swiggy, I think the expectation as the festive season begins, we've already seen the first 9 days of Navratra where consumer discretionary spending has gone up exponentially as we are doing our channel checks. And therefore, as festivities continue in real earnest with Diwali coming in over the next few weeks, more festivities to follow. Both food delivery as well as quick commerce are expected to grow at a decent pace. Obviously, the hike in platform fees is something that might aid and assist the overall numbers as well. The opening of dark stores, which has obviously got accelerated for all the players, whether it's Eternal, whether it's Swiggy, whether it's Zepto in the unlisted space, and the competition itself. I think very few players will probably now start coming in, though we are hearing news of Jio and Amazon probably doing a few pilots, DMart doing a few pilots as well. But I think a nationwide presence is something that both these players probably have up their sleeve in terms of both cost as well as pricing advantage, along with logistics support that they probably get. Having said that, I think the entire expectation in terms of better numbers probably getting gestated in, with better numbers expected to come through in Q3 as well. Further momentum in the stock cannot be ruled out. However, I think two things. One, from a Marcus to India perspective, it's way above pivot levels as we see, and therefore a little bit stretched from an aggressive entry point at this juncture. And the second element, obviously, valuations. So valuations are sky high. Swiggy, tad bit lesser compared to Eternal on a peer-to-peer comparison, but valuations still comparatively remain relatively higher as we speak. So I think anybody who's holding the stock can probably ride the momentum. Fresh investments probably still into it.
Okay, and Mayuresh, just to follow up on that, between the two, given the kind of run-up that Eternal has already seen and Swiggy on the flip side has been more of a steady move, which one do you still prefer if you had to pick between the two?
So I think Eternal is a stronger play. I think
Okay.
Swiggy's numbers obviously have still got to come through. And whether they show a sustained recovery, and the management probably hints with the expansion and the competition intensity that they're facing, at what point of time do they break even over the next 2, 3 quarters, is something to be monitored with progress in numbers coming through. Obviously, Swiggy's valuation, as I said, a little bit cheaper compared to where Eternal is. But I think Eternal's growth dynamics might be a tad bit better compared to Swiggy.
Okay, so sounding good, and the preference is still lying towards Eternal. So let's see how many quarters it takes Swiggy to try and break even on all fronts. They have been guiding that Q3 FY26, and that was slightly pushed. So let's see what happens on that front. But while we're talking about earnings, all eyes are on GM Breweries today, and the earnings have not only been good, they have been stellar to an extent where the stock is up about 20% as we speak. Let's start by talking about their revenue. Revenue has come in at 180 crores compared to 149 crores, up about 21% on a year-on-year basis. EBITDA also healthy at 44.8 crore thereabouts, up 63% year-on-year. What really stands out is the net profit number, which is up 60% on a year-on-year basis at 35 crores, and margin expansion also looking very healthy at 24.8% compared to just 18.5% on a year-on-year basis. So very healthy move coming in. And let's just pull up the stock of GM Breweries, because almost a 20% move. And also want to see a slightly longer term chart, let's say 1 month, 3 month for GM Breweries, because the kind of run up we've seen today, of course on the back of these earnings, but also want to see what the stock has been doing. Last 6 months itself, the stock is up 40%. Kunal, your view on GM Breweries, and even without triggers like earnings, do you think this move is sustainable for something like GM Breweries?
May not be sustainable,
Okay.
Snehi, because we've seen that such kind of a strong 20% up move generally gets sold into. But this could be a more developing move for the stock to build into or start of a trend. Now, this 20% move has brought the stock back into October 2024 levels for the stock, which means almost 11 months of underperformance for the stock from 900 to, at one point, the stock was almost on the verge of breaking substantially below the 600 mark. So that 300 pointer correction for GM Breweries, that gets corrected or negated as such. So that, I believe, is a much more bigger positive for the stock after such a kind of a strong price uptick move. Eventually, we've seen that stock prices generally get some bit of mean reversion mode after such a kind of a strong up move. But then that becomes a very good opportunity for traders who are looking to buy and build into the stock from a portfolio perspective.
All right, Kunal, your view with regard to PG Electro, that one has also perked up 7% in trade. Very strong move today. Just trying to understand volume led and what are technical indicators reflecting on that one.
So again, a stock which has been all over the place, frankly, Harsh, over the last 3-6 months. I remember, I think tracking this stock when it come into the F&O around 775 or 800 levels, and from there it had dropped down to as much as 500. So I think the volatility for the stock price has increased substantially since the entrance into the F&O category. But then I think at current levels, I don't see any major kind of a turnaround. Maybe this could be yet another up move into the stock price. In the last, I think, 3-4 months, we've seen similar kind of an up move for stock, but then that generally gets fizzled into. So no major breakouts on the stock price as of now. Would suggest an avoid.
Okay, so avoid coming in on PG Electro Plus, at least on the technicals from Kunal. But it's very interesting. We are going to be interacting with the management of PG Electro Plus tomorrow at 9:45 on the market. So and first trade. So you might want to tune in for that interaction. Lots to talk about with the management in terms of copper prices, if they're planning to pass on the costs, what's happening with the entire AC segment, festive demand, GST cuts. So much to talk about. It's going to be a very interesting interaction. But let's move away from that. And the centre is planning to set up a new federal agency for India's transport sector. It is likely to be named the Gati Shakti Transport Planning and Research Organization. And my colleague Samir Dikshit is here with more details on what this entire setup could be. Samir.
The government is planning to soon set up an apex federal agency for India's transport sector, and its name likely could be GSTPRO, Gati Shakti Transport Planning and Research Organization. As the name suggests, the primary purpose of this organization is going to provide the much needed planning, a better planning for the transport sector, and also provide valuable research and inputs so that the projects can be framed in, and it can be executed in a much, much better way. This GSTPRO is going to be a central agency which will have a participation from the key transport ministry, whether it be railways, highways, shipping, and the other transport ministry. And also it will have a representation from the technical institutions like IIT and even the research organization as well. The primary purpose of this apex body is to remove the silos which are there in the transport ministry. As of now, the transport ministry, they take up the individual project, and in major of the cases it has been found that there are a couple of challenges. When it comes to resolve those challenges, it usually takes a lengthier span of time. But with a central agency, and that will have representation from all the transport ministry and the research and much needed inputs, government understand that these silos will be eliminated, and this will help to lead to a better planning of the project. And this will also come up with our long-term vision and roadmap for the transport sector, for example, for the next 10 or 15 years. And this particular model will be based on the successful transport model which are there in the developed countries like China, Japan, and even Korea. So based on this line, government is planning to set up a central or the apex federal agency that will be housed under the central secretariat and is likely to be led by a senior secretary rank officer.
Okay, thank you so much for that.